We have a lot of movers, stock stories, earnings that we're following. Diane King Hall, host of Morning Movers, is here to talk about Burlington. Used to be Burlington Coat Factory, a winner this morning, up about 2%.
It is, but as you mentioned, you saw the broader market pulling back. Even the gain that we're seeing in Burlington, not as much as the pop out the open, but they did better than expected on their most recent quarter. They reported earnings at $1.60 a share. So again, that was much better than what the street was looking for. Revenue came in at $2.5 billion. That was close to in line with what that was essentially just slightly below what the street was looking for. But investors seeing overall it as a win because it is an increase on a year-over-year basis, up 6% year-over-year for revenue. Comp sales were flat, but that matched what guidance was. So again, you have this sigh of relief around Burlington, and it goes to show that the discounters have been holding up. I know you'll recall, Nicole, that we reported TJX and how it performed, and it looks like consumers are still shopping in certain places, and there are still wins in certain places. They did improve margins. That was in part thanks to some favorable timing of some expenses. In terms of their guidance, they maintained their full-year adjusted EPS guidance they see that as a range of between $8.70 to $9.30. So it shows that they are standing by their forecast even in the face of tariffs. They also are maintaining their guidance when it comes to revenue for the full year. They're affirming that they're expecting full year sales to come in between just above $11.25 billion to just under $11.5 billion. They talked about the tariff environments and the uncertainty around that. The CEO talked about that, but it sounds like the expectation is that they can mitigate those risks and that there are also opportunities. The CEO saying, quote, "The changing landscape of tariffs creates risk and opportunities for our business. We have many advantages that traditional retailers do not have. We can move more rapidly and more flexibly." And he knows that the next months could be challenging, but if we navigate them well, they could come out ahead. So that, again, Nicole, reminds me of what we see when we talk about TJX, for instance. They do have that ability to be more nimble and to make shifts when it comes to their inventory.
And it's amazing because some are talking more about tariffs, some are talking more about just strategy overall. American Eagle Outfitters, for example, basically, I'm paraphrasing, but saying we got it wrong. They didn't do particularly well. Abercrombie was good news. Urban Outfitters was good news. Dick's had some bright spots in there. I mean, they made that Nike acquisition. So it's a case by case. Which ones are exposed to the tariffs? And is your strategy on point? Right?
Yeah, and can your strategy mitigate the risks and the impact of tariffs? And again, it just goes to show that this is the kind of climate. It reminds me of, obviously we've made this quick recovery, but at the beginning of that downward pressure that we saw and worries about the consumer reminded me of that period of time around the GFC, right? And that's where you started to see the advantage being gained by the discount retailers. Now, Burlington is down on a year-to-date basis, but on a year-over-year basis, it's up more than 20%.
All right. Next up, we're looking at HPQ. That one has been to the downside to the tune of about 4%. We'll check it out. The story there?
Getting hit hard this morning, and this is off of a miss on EPS. They called out tariffs. They blamed tariffs for a lot of the problems that they're having. Profit was down sharply for them. Adjusted EPS came in at 71 cents. That's below what the street was looking for. The street was looking for 80 cents. Revenue was slightly ahead of estimates at just above $13.2 billion, but it wasn't just about missing on EPS. Their guidance is disappointing as well. They're forecasting for Q3 a range of between 68 to 80 cents. Street's looking for 90 cents. They also lowered their full year guidance to between 3 to 3.30. That's below consensus as well. They blamed the tariffs for the Trump administration. They said those have driven costs higher. It's weighing on guidance. They said they're working to offset the impact, but they're trying to shift their supply chain. They've been trying to expand production in Vietnam, Thailand, India, and Mexico. But again, they're trying to shift all of their North American products out of China by the end of June. So they have a lot of exposure here to tariffs. So again, you're seeing major pressure, even as we're speaking, down even more right now, down more than 8%.
Right, and then I love what's going on with C3 AI. We often have the CEO on here on the network. I mean, really, especially, we heard NVIDIA, we think about AI, you think of AI, the ticker symbol of C3 AI soaring.
Yeah, that's right. I mean, up more than 20% right now off the back of their numbers. They did better than expected in their most recent quarter. They still reported a loss, but the bleeding wasn't as bad as expected. A narrower loss than feared here when it comes to C3 AI. They reported a loss of 16 cents per share. The street was expecting a loss of 20 cents a share. They did report a beat on revenue coming in at 108.7 million. That was ahead of consensus. So again, overall, beating the bars there. The CEO calling it, quote, a momentum building year. Full year revenue has risen 25%. Guidance signals continued growth. They're guiding for the July quarter revenue to come in between 100 and 109 million. And full year revenue, they're projecting between 447.5 million and 484 million. They highlighted some key partnerships there. They've extended their joint venture with Baker Hughes. That'll run through June of 2028. That accounts for about a fifth of C3 AI's revenue, supports its push into oil, gas, and chemicals there. So you have some strength there. And then they've also got these strategic alliances within the tech sector with the heavyweights like Microsoft, Amazon, AWS. That's helping to fuel sales growth as well, Nicole.
We talk about all these different names and how the big picture on how these names have been affected by tariffs. I know Best Buy was a name we were following, and Burlington, and some of these retailers and some of the tech names. But, with this story today with the U.S. court blocking many of the Trump tariffs, it'll be very interesting to see how things shape up in a quarter from now.
It's true how things shape up, and even just it's watching the overall market reaction. We started out much higher. We've cooled a little bit now. So it's like investors, traders, algos trying to get clarity. And, you want to know what's the path forward with regard to tariffs. Really quickly want to give you some analyst reaction with regard to C3 AI, because that stands out as a continued winner today. The stock is up more than 20%, but the views are mixed over here. Oppenheimer has an outperform rating on C3 AI. They're keeping the outperform rating, but they've lowered their price target to $45 a share. They previously had it at $56 a share. KeyBank is underweight, but they have boosted their price target. So they actually see downside from here. They've raised their price target to $18 a share. They had it lower than that. UBS on the sidelines. They're neutral on C3 AI. They've raised their price target to where it is now, essentially $28 a share. So all over the place, the street views on this one.
Okay, Diane King Hall, great on the movers there. We've covered a lot of stories for you this morning, folks. Many names in the news that are moving in big ways. C3 AI up 25%. Hewlett Packard down 8%. NVIDIA has been up about 6%.